Yo, it's Hublo back with another video. So today we're going to be going over scalping versus swing trading. This is definitely for beginner or intermediate traders that don't know exactly which one kind of fits their style yet, but that's why we're here. We're going to go over that today and to see which one kind of fits your style of trading and which one you're more comfortable doing. This works for futures, forex, crypto trading, and any other type of trading you would like to, choose, whether that be high frequency. But let's get right into it. So today we're going to be covering swing trading, the balance in between short and long term trading, how to confirm the right trading style for you, scalping, fast and high frequency trading, and position trading, the long term investment approach. So that's for like stocks and things like that. So, scalping versus swing trading versus position trading, selecting the appropriate style. Traders employ various strategies in their approaches. While some concentrate on short term fluctuations, others may maintain their positions for several weeks or even months. In this decision, I'll explore the three primary trading styles: scalping, swing trading, and position trading, highlighting the advantages and disadvantages of the types and the types of traders most suited for each method. So let's dive in. Scalping, fast and high frequency trading, time frame and holding time. So the chart time frame for this will be to rely on the 1 minute, the 5 minute, the 15 minute, and the 30 minute charts for swift analysts and decision making. Um, Hold trades for seconds or minutes. So positions are swiftly opened and closed for small gains. So this is with scalping and high frequency trading. You're going to want to be in those positions for a small amount of time because at the same time, you don't want to, be analyzing from a short time frame, which is the 1 minute through 30 minute, and think you're gonna get a long impulsive move that you can hold for hours or days, or months from that type of trading. It's not gonna work out possibly long term if you don't do the proper analysis overall in order to be able to capitalize on that position long term. Goals and pairs. So price moves. Scalping aims for small price changes to profit. So with scalping, it's all about the quick impulses that happen in the market. So you're going to want to trade through high volatility markets. For Forex, I would say definitely London session and definitely New York session early in the morning, especially if you're trading indices. Trade liquidity. So high liquidity enables quick trade entry and exits. Pros of scalping. So quick gains. Scalping allows traders to profit from quick price shifts, no gaps, positions close daily to minimize overnight risk, and market news. Short trades mitigate major economic news impact. So those are the pros of scalping and trading and just getting in and out of the market. And I could definitely attest to that because a lot of those other things, those are things that definitely happen if you're holding trades for long periods of time. Um, that can definitely go wrong. Gaps, news, and also spread and things like that. So the cons of scalping. So you have to have a quick focus. Scalping demands intense concentration and rapid choices, increasing the stress when it comes to your trading and the position sizes that you're currently holding at that time. And then the high costs. Frequent trades lead to significant fees, eroding potential profits. And over trading. A lack of self control may result in excessive trades, amplifying losses. So those are the cons that could come with scalping. You have to take a lot more positions in order to really probably get to your goals, or you just have a lack of discipline or self control, and you have so many trades, and that causes you not to really be able to hone in on things like journaling and like keeping track of your trades, because there's so much trades you take. It can be exhausting to journal all of those. Swing trading, balance between short term and long term. So the time frame and holding time, the 1 hour, 4 hour, and the daily charts use traders use analyze multiple time frames for better decision making, holding trades for days to weeks. This strategy balances quick profits with long-term trends. So goals and pairs. So trend swing capture. Swing trading aims to identify and profit from price fluctuations. Trade smart now. The strategy can be effectively utilized across various financial instruments. So you always want to trade um, as price is fluctuating, and with the trend. That's definitely, one thing that I learned, like as a swing trader myself, is you definitely want to trade with the higher time frame trend, because in the long run, that's gonna, definitely help you out a lot when it comes to just holding your trades and feeling confident in holding your trades. And if anything happens in between that, that's mostly just due to either news or just a shift in price that was just unexpected, or a price correction. Pros of swing trading: reduce screen time. Swing trading requires minimal daily monitoring, providing flexibility. Capitalize on big moves. Traders profit from major price changes over days. Lower cost than scalping. Fewer trades, cut commissions, boosting profitability. So I could definitely attest to that, but you just got to watch out for swap. So swap is definitely something that kind of happens when you're swing trading. Sometimes when you're in positions for days, it depends on your broker. It depends on who you have, you know, what type of like account you have and whatnot. But there's ways around that. You just kind of gotta mitigate it, which a lot of that is sometimes out of your control. But like I said, it's just depending on your broker. Cons of swing trading. So, swing trading demands time for positions to develop effectively. So, patience for trades are needed. So, you got to be patient when you're a swing trader, because things are not always going to happen as fast. But patience is needed in this game. So, uh, me as a swing trader, I definitely had to learn that. And I definitely, don't mind, being patient and waiting for my trades. But sometimes it can be, kind of nerve wracking, especially when you're like close to TP, or you're like 20, 10 pips away, and you're like, oh, should I close? Should I hold? It just really depends. Excuse me, y'all. I needed a drink. So, sudden market shifts can disrupt swing trading strategies significantly. Market gaps and news. So, this is the biggest thing that I would say um, definitely affects price, and spread and market open and close. That's another thing you guys probably want to add to your notes, is market gaps and news, spread, and market open and close can definitely cause significant price change and disrupt your positions if you're already in them, or if you're attempting to take them. I definitely, advise everybody do their due diligence, and always like taking a heed of the spread and everything like that before they enter in positions, and keep a track of the spread if you're already in a position that you're looking to catch at least 50 to 100 pips or more. So I definitely would, just pay attention to that. Understanding market dynamics is crucial for success in swing trading. Essential market insight. So you have to be basically a market master to really, understand what it is to really be a swing trader, and to be confident holding your trades over a period of time. You're never really going to master the markets, but always be in a position of being teachable and getting to that mastery status. I actually have a section in my Discord where I go over market mastery, and I post things in there every Saturday after everybody's done trading for the week, and kind of give them tips of how to go about mastering the market, even though it can never be done, because really the market is always ever It's always changing, it's always evolving. There's different news, especially with Trump and whoever's in office, and it sometimes could affect those type of things or things that may be happening overseas as well. So definitely just take heed of that. Position trading, the long-term investment approach. So this is mostly like for stocks and people who like to, just kind of let their money sit and not really have to worry about it too much. So time frame and holding time, daily, weekly, monthly chart. So those are the most highest time frames you can choose to execute trades on. And I would mostly usually use that. I use the daily and up usually when I'm trading stocks, when I'm looking at XRP, when I'm investing for long term trades. Those are the ones that I would usually be investing into, like my crypto wallet and stuff like that. So that's what I would use this for specifically. So analyzing different time frames helps identify long-term trends effectively. Long-term trading, weeks to years. This strategy allows investors to capitalize on significant market movements, goals, and pairs. Maximize profits with trends. Position trading capitalizes on significant economic shifts for gains. Best for trading. This strategy excels across diverse markets, ensuring broad opportunities. So this could definitely give you a lot of different opportunities when it comes to making money over a period of time, especially when it comes to stocks and things that you just have to hold and kind of sit on. Pros of position trading. Minimal screen time needed, so position trading demands less frequent monitoring and is perfect for busy investors. So if you're busy, if you got things that you need to do, this is perfect for you. If you don't like to if you don't really want to learn too much about the day-to-day trading and having to do this every day or do this every week, this is definitely a way that you can kind of get your foot in the door when it comes to trading without having to fully, commit to diving in too much into the learning process of taking a trade, managing a trade, things like that. Even though those are things that you're still going to have to do with long term position trading, it's not going to be as crucial as you're doing it every week. Like people like me that are day traders, 4 to 5 times out of the week, I'm trading. So it just really is a big difference in between the first example, the second example, and position trading. So totally different. Uh, Big trends, big profits. Capturing significant market movements can yield substantial long-term gains. So you could definitely get a lot of gains over a long period of time when it comes to Bitcoin, cryptos, and like things like that. When you invest big enough, you could definitely see a lot of success and a lot of money. In a period of time, but you're just gonna have to sit on it sometimes. Price can always fluctuate and go up quickly, but it's all about what you decide to do at that time. Less stress than day trading. I could definitely attest to that. It's a little bit less stressful, especially if you're doing position trading. That means you're not really worried about the money you just already invested. So you're more inclined to kind of feel comfortable, losing that. Even though, yes, you did wait a long time to either see if you were gonna make a big profit off it or lose a big profit, but once it's in a trading account, doesn't matter if you're scalping, doesn't matter if you're uh, swing trading, doesn't matter if you're position trading, you just got to put in your mind it's already gone. And if you end up making something from it, then just be happy with that. But that's kind of the mindset you have to have, because once you put any type of money in the market, you kind of already got to consider it gone. And not even just like from a negative mindset, just in a mindset of like, you've already risked it. You already risked it, and it's okay. And if you're smart enough, if you're able to get uh, the right asset to move at the time in which you executed your position, and whatever time that is, then you can seek to see some gains behind that. So less stress than day trading, reduced pressure from constant market fluctuations lead to a calmer experience. So it definitely leads to a calmer experience when it comes to trading. And It's just a little bit less hectic than, day trading. Cons of position trading: requires patience for months. Position trading demands significant patience, often spanning weeks or months. Higher capital needed. Investors needs substantial capital to withstand potential market drawdowns. Track news and trends. Continuous monitoring of news and market trends is essential for success. How to choose the right style for you. So, quick trades, instant results. Scalping involves rapid trades yielding quick profits or losses. Quick focus, fast decisions. Successful scalpers must make swift decisions under pressure. High frequency trading, scalping requires executing numerous trades within short time frames, sorry. Factors of choosing swing trading: integration of technical and fundamental analysis, integrating both analysis improves the precision of trade decisions and overall accuracy. Swing trading: significant actions without needing to trade all day. So swing trading captures significant price moves over days. And then we have days spent waiting for trading opportunities. So patience allows for better entry points and risk management over long periods of time, especially if you choose to be a swing trader. And then factors for choosing position trading: investing for the long haul and broader economic trends. So focus on economic indicators and global market trends. Holding positions for weeks and months requires patience and strong risk management in your strategy. So you guys got to definitely make sure you keep track of that. Again, this video was mainly just for intermediate and beginner traders. But if you are a trader that's been in the game for a while and you consider yourselves having your feet wet, this is definitely good for you to kind of have a refresher as well. I want to thank anybody who has got to this point and is watching. Definitely leave a comment below and like this video so you guys can continue to see videos like this. And I appreciate you guys for watching. Again, I'm Hublot, and I'm out.